Good afternoon. This is neXgro's US dollar outlook. I'm questioning the gold run, the question mark there. This was done today, 19 March, around about 10 to 3 South African time. neXgro is a South African intermediary moving grains and oilseeds to off-takers. First of all, my point of departure is flow of global capital. This whole analysis is based on intermarket analysis, the whole presentation based on intermarket analysis. I'm looking at the holistic, I'm taking a holistic view of global capital flows vis-a-vis the news of the day. So what we see is a tremendous move of global capital into gold and gold to new highs, propelling gold to new highs. But what we're not seeing is capital moving out of the dollar. That is why on the left-hand side here, I'm questioning the sustainability of gold, and I'm also throwing in this channel Bitcoin as the new contra currency to the United States dollar. So let's look at gold. Let me just take my own photo away there. We've had a breakthrough, very important resistance at 2070 over here. Look at the importance of 2070 resistance. COVID, Ukraine, another move up. The end of last year, every time back below 2070, just couldn't consolidate. 3 weeks ago, we had the first sustainable breakthrough 2070. The point is, the breakout target is 2,330. We've only reached that halfway, and I'm questioning whether gold would go further. You also see the pause here, starting last week and this week. Now, let me immediately state this is not a technical analysis report. This report is based on intermarket analysis. So this is exactly what I'm talking about. We've seen gold in 2 very strong weeks going through 2070, but the United States dollar actually strengthening, in actually weakening, but not past 110, which to me is a very crucial level. One would have thought that with gold so weak, the United States dollar would have weakened by now through 110 towards 112, and actually it found support at 110 and strengthening, now sitting exactly on a 50-week moving average, whereas gold is way above the 50-week moving average. So the first thing that we are going to look at in the intermarket analysis, exactly what the word says. We are looking at the whole market, at the whole flow of global capital to see whether the move in gold is sustainable. First is silver, the other true precious metal, has thus far not benefiting from gold's run, as was the case in 2010 with a global financial meltdown, and as was the case in 2020 with the outbreak of the COVID pandemic. We see that gold to a new high, silver very, very low in terms of the previous highs over there. So silver not benefiting from gold's run, and that might be an indication that the gold's run is not sustainable. Also platinum, also regarded a precious metal, but more of an industrial metal, very bearish. Quite a lot of ground to cover towards the psychological $1,000 over here. But what is more important, look at this. The moment gold started to pause this week and last week, platinum made an abrupt turnaround couldn't break through a 50-week moving average, now back at $900 an ounce sitting there. So again, this week, although we've only had 1.5 days of United States trading, still, again, a very bearish picture for platinum. So platinum really not benefiting from gold's run. More important, we'll have to look at gold shares as an arbitrator of future gold prices. And the reason for this is that the investor community would discount future moves in the price of gold in the shares of gold mining companies. We're looking at Newmont, the largest mining company on a weekly basis, and gold definitely not discounted in the share price. Look at the situation of the 2020, how the price of gold running up because of the global pandemic, and also the war in Ukraine was discounted in the share price. Now it is definitely not the case. In actual fact, this is a very bearish graph. And if you look at the second largest mining company in the world, Barrick Gold, domiciled in Canada, you would see an almost identical graph. Then we come to Anglo Gold, a company very familiar to us in South Africa, the fourth largest mining company in the world. And look at this. First, we had a very strong break on the back of the higher gold price, but the moment gold started to pause last week and the first 2 days of this week, we see the price of Anglo Gold dropping sharply again to below 400. This is South African rand per share, which is an extremely important resistance level. Look there, look there. Look how where previous highs were. This on the back of the COVID pandemic, and already a sharp turnaround. So the investor community is really not discounting a next move higher to $2,330 in the share prices of gold mining companies. Ever more important, the Canadian dollar, which is a very good, very reliable indicator of United States dollar health, by now, excuse me, should have benefited from strong gold. It is, as a matter of fact, very weak. It has weakened from 1.32 Canadian dollar to the US dollar, still weakening, and now above 1.35 Canadian dollar to the US dollar, and not only that, also weaker than a 50-week moving average. So no benefit for the Canadian dollar because of the rise in gold that should have happened if the investor community felt that gold's move is sustainable. Then going on to the real Brazilian real, a very good proxy for all emerging market currencies in my view. Again, the same graph, weakening all along, sitting above 5 real to the United States dollar, above a 50-week moving average, and surely emerging market currencies should have benefited from strong gold, and there is no indication of this. Then we come to the difficult one, cryptos, using Bitcoin as a proxy for cryptos. There are two very good reasons for that steep rise in cryptos. I'm not discussing this. This is not the point of, that is not the point of this presentation. But I'm asking myself the stability of cryptos in capacity of the US dollar's other currency on the back of the rise in gold and the very little US dollar weakness. Also, we have reached the 100% breakout target. This is not a technical analysis report, and there has never been a reason for any security price to turn around just because a perceived 100% breakout target has been reached. So I'm just pointing it out that this could be a reason for a turnaround. I'm not saying that this is the high of the recent move. So in summary, gold and Bitcoin as proxies for cryptos have had tremendous upward runs to new highs. The USD, however, is only marginal weaker, questioning the stability of these moves. This outlook is based on intermarket analysis. Important. The conclusion is that neither other precious metals nor precious metal share prices are discounting gold's new high in own prices, thus questioning the sustainability of gold's move. Supporting the previous point, the Canadian dollar and real as proxy for all emerging market currencies should really have benefited from gold's new high, which thus far is definitely not the case. Extremely important, this outlook is nullified should the Euro USD weakens past $110 to the Euro. Then I'll have to revisit and reconsider everything that has been said here. All graphs drawn from the Refinitiv platform. Note our disclaimers. This is an outlook for the US dollar, not for equities, cryptos, or whatever you are reading in here.